Hey traders, welcome back to the weekly Forex Forecast. Next week is a big week because we've got 3 interest rate decisions as well as non-farm payrolls on Friday. And it's FOMC on Wednesday out of the US that we really need to be paying attention to. This is the big event next week, and I'm going to show you in today's video how I'm looking to play the dollar pairs on this news event next week. Okay, so if we look at the scores for the coming week, you can see the 2 markets that are really in play here are the US dollar and the Swiss franc. Both are above 50% to the upside, and these are when we get significant edge in the markets. Now, I am only focused on risk off setups once again, and I have been all month, because it does look like when we look at the markets, you can see the Russell has now retraced almost all the way back down to the yearly lows from last year. And when we look at other markets like the Nasdaq Composite, you can see we are now on the verge of quite big breakdowns in the stock markets. And this is what can bring in risk-off moves, not just in the stock market, but also in Forex as well. So once again, I'm going to filter out risk-on setups, only looking at trading risk-off Forex pairs. Now, you may say, but John, we just had 4.9% GDP out of the US. You can't have a crash or a recession or serious risk-off with 4.9% GDP in the US. However, I remind you that GDP is backwards looking. It's a lagging piece of data. It's telling us what happened in July, August, and September. We know there was no recession during that period, and we know the market didn't crash during that period. What we're now looking is ahead to future GDP prints Q4, which were in Q1 next year. Now, the setup that we also have is very similar, in my opinion, to the 1981 setup, where we had the yield curve inverted and we had inflation at that time going above 7%, which makes this cycle actually different from 08, 2020, 01, and in fact, very similar to the 80 and 81 cycle, in my opinion. And in the 81 cycle, we had Q3 GDP come out very similar to what we just had here, but instead of 4.9% at 4.3%. And the US economy went into a recession straight after, into Q4, Q1, and Q2 of 82. So don't think because we just had a strong GDP print for the last 3 months that we can't go into a more recessionary environment in the US. And I do think, in fact, that is coming, and we're likely to see risk off over the next couple of quarters. And this is why I've been focused on risk off only setups in Forex. So alongside the Swiss franc and the US dollar to the upside, I do like the New Zealand dollar to the downside. I also like the Australian dollar, although it has slightly strengthened. So New Zealand shorts are my preference this week versus the dollar and the Swiss franc. And I also, aside from that, like the Canadian dollar. It's neutral, but it is actually getting weaker. The momentum is to the downside, as you can see with the red arrow. So what I'm focused on this week is, once again, mainly the commodity currencies to the short side, the New Zealand, the Aussie, and the CAD, versus the safe haven assets of the Swiss franc and the US dollar. And something else to note as well, the Japanese yen has been one of the top shorts in the scorecards for quite a while. I've been filtering it because I don't want to trade risk on. And if you short the Japanese yen, that is risk on, because in risk off, the Japanese yen will appreciate. But look at the score coming into this week. The yen has bottomed in the scorecards. This is a risk off sign. It's actually a sign that we've been lacking over the last month or so, where if we are going to get real risk off, we should see the Japanese yen strengthen. So the fact the yen is now strengthening the scorecards is a warning of further risk off to come, and actually a shift into a more risk off regime in the Forex markets. Alongside the commodity currencies, we will also look at pound and euro shorts versus the dollar and the Swiss franc, but just bear in mind, the commodity currency should underperform, better shorts, in other words, than pound franc, pound dollar, euro franc, euro dollar next week. But we can also look at euro and pound shorts versus the franc and the dollar. Okay, so let's have a look at the markets, starting with crude oil. We cover crude oil every week, but this week I don't really like crude oil because crude oil is between a rock and a hard place. We should see crude oil having downward pressure applied to it with the global slowdown, risk-off regime coming in. However, if there is an escalation of the war in the Middle East, then we can see crude oil spiking in price. So it's really a risky short, but at the same time, it's not a fantastic long either. Because of the ongoing risks around the war in the Middle East, I do favor, on balance, crude oil long positions. However, I'll probably be avoiding trading this altogether next week. So if you are looking at trading this, and this was a market that bounced from the lower bound last week, did come down, test it, and we did get a short-term bounce to the upside. I would be looking for the same. Any pullback would be viewed as an opportunity this week to look for an intra-week breakout into the previous high at the 91 area. Or if we pull all the way back, we test this low over here and also the 81 area. This would be the second place I'd be looking for a near-term buy opportunity potentially in oil. But again, I personally am unlikely to trade crude oil next week. I don't think we have great edge to the upside or the downside anymore in this market. Okay, so moving on to the Swiss franc pairs. These are my favorite pairs heading into next week, starting with New Zealand franc. And the markets highlighted in gold are my favorite markets out of the favorite markets which are listed. So out of all the franc pairs and the dollar pairs, I do like New Zealand franc and CAD franc to the downside the best, followed by New Zealand dollar and then US dollar CAD to the upside. So coming into this week, I am looking for further declines in this market. Last week, this was a market highlighted for a potential short from its upper bound or a breakout intra-week. And you can see in last week's video, we actually tested the upper bound from last week and we did have a sell-off from that area. Because of this, going into this week, usually if you get a test of an upper bound, let's say, like New Zealand franc last week, what tends to happen is you could push a bit higher, but you then tend to get the intra-week breakout in that market down to, in this case, the prior low and the 0.5170. So that's what I'm going to be looking out for New Zealand franc. But if we continue higher, just like last week, and we pull all the way back and we retest the low over here, and we test the 0.53100 area, this is the second place next week. I'd be looking for a near-term short in New Zealand franc. Next is CAD franc. Now I'm going to be looking for one of two things heading into next week. You can see we had this big momentum sell-off and now we're consolidating sideways. So any pullback in this market next week into the upper bound, perhaps we even peek through the top here and test the low over here. Anything into the 0.6570 would be viewed as the opportunity to look for a near-term short. If we continue to trend all the way up into this level, that's what I'm going to be looking for, a near-term short from this area. But if we start to break out intra-week, so instead of holding this trend all the way into the prior low, maybe into the 0.6570, if instead we fail to hold this and we break straight through, I'm going to be looking for an intra-week breakout to the downside in this market, dropping down to the 1 hour chart. Usually that's where I like to look for intra-week breakouts, down to the 0.644, you could say 30 area in this case. Next is Aussie franc. This was a market highlighted in last week's video, and we had a really nice sell-off from the upper bound in last week's video. And in fact, this was a market I traded myself, and this was one I actually shared in real time with members. And I would like to see this again. So when I'm talking about a short from the upper bound, have a look at the price action in Aussie franc last week, because that's exactly the kind of move I'm looking to capture from these upper bounds. So any continued pullback in this market is viewed as an opportunity to look for an intra-week breakout to the downside. I'm going to be looking down to the 0.5640. Maybe we come through and we test the prior low, that would be good. But anywhere in this area, I'd be looking at potentially booking short-term profits on an intra-week breakout. Or if we hold the trend, we pull all the way back into these lows over here and we test the 0.5790. Once again, just like over here, I would be looking for a near-term shorting opportunity in Aussie franc next week. Next is pound franc. This was another market highlighted in last week's video. We tested the upper bound, and again, because we tested this last week, I would not be surprised to see this fail to test the upper bound, but instead actually break out intra-week. We do, of course, have the interest rate decision out of the UK on Thursday. So there is plenty of time to trade this market, Monday, Tuesday, and even Wednesday into the interest rate decision. If we continue to pull back though, even though we traded into the upper bound last week, if we continue to pull back and we test once again the 1.1030, this is the second place I'd be looking for a near-term short in pound franc next week. And last but not least, we have Euro franc. This was another market which tested its upper bound last week, which suggests we may actually get, a reversal or a breakdown kind of Monday and Tuesday without testing the upper bound again. If that's the case, I'm going to be looking at an intra-week breakout in this market. Maybe we test the high once again and we break down like this into the 0.9460 area. Or if we just hold this and we continue to trend higher, and we trade into, you can see there's a nice low here and we test it on the underside. So there's a nice key area of resistance in this area here. If we come up and we test this and we're also pushing into the upper bound, this is the second place I'd be looking for a near-term short in Euro franc. We did actually break through the upper bound much harder than we did in the other franc pairs with euro franc last week. It's suggestive of some underlying strength, and this is also backed up by the fact the euro is actually scoring quite highly. So I do think we can look at euro franc and euro dollar, maybe from the upper bound next week, but just bear in mind the New Zealand, the CAD and the Aussie are going to be better shorts than both the pound and the euro heading into next week. In fact, the euro shorts are my least favorite because even if they do work, they're likely to underperform the other markets that we're looking at. Okay, so moving on to the dollar pairs, and the dollar pairs were also highlighted, for dollar strength last week. We did get dollar strength, but we didn't get any significant moves. Why? Because we've got FOMC coming up and there wasn't any real money going into the dollar pairs last week. So we did get sell-offs, but we didn't test any of the upper or lower bounds. We just simply kind of drifted higher in the dollar and drifted lower in pairs like New Zealand dollar. So coming into next week, New Zealand dollar to the downside, US dollar CAD are my two favorite markets. It's unlikely these markets are going to do anything until Wednesday. So after the interest rate decision on Wednesday, I'm going to be looking for one of two things. Either we break down from these areas and we get a sell-off on FOMC as the dollar rallies. In that case, I'm going to be looking for a pullback and a follow-through trade in New Zealand dollar down to the 0.5720. And the second thing I'm going to be looking for, because I can either be short this market or do nothing next week, buying New Zealand dollar, in other words, shorting US dollars next week is not an option for me. So if we just consolidate and then we get a rally into the upper bound after FOMC and we start to see it stall out, this is the second place next week I'd be looking for a potential short in New Zealand dollar. Next is US dollar CAD. Again, I can either buy this market or do nothing next week. Selling this is not an option. So I'm going to be looking for the same thing. I'm going to be looking for a consolidation into Wednesday. And then if we can get an intra-week breakout on the news and start to pull back, I'm going to be looking for the second move, the follow through into the 1.400. And if we just continue down, we get FOMC coming out on Wednesday and we get a sell-off in US dollar CAD. If it's very, very strong, I would like to see it stall out first. I don't want to get involved buying something after a news event if it's just going to go straight through like this. So I'd like to see it pull back, stall out, and this would be the second place next week I'd be looking for a near-term buy opportunity in US dollar CAD. Next is Aussie dollar. Very, very choppy, but I do think this gets resolved next week with FOMC. So any continued pullback into FOMC and then a nice strong sell-off on FOMC like this, I'm going to be looking for the consolidation, the pullback for the follow-through trade into the 0.6230. And if instead we just drift higher and then maybe we even push higher for whatever reason, FOMC, we test this high, let's say, I am going to be looking, this would be the second place I'd be looking for a near-term short in Aussie dollar heading into next week. Next is pound dollar. Again, I prefer the commodity currency short, especially New Zealand and the Canadian dollar versus the US dollar. But we can look at pound dollar and euro dollar. I do think both of these are likely to decline as the US dollar pushes higher. And remember, if you look back to the scorecards when I showed you earlier on, the US dollar has, for the first time, continued its bullish momentum in the scorecards. And this is indicative of a much bigger breakout to come in the US dollar. We do have FOMC, and of course FOMC can change things and reverse markets, but all things considered, the scorecards are suggesting even though the US dollar is currently consolidating, we are at the point of starting the next leg higher in the US dollar. So any pullback in this market, and I expect it to do pretty much nothing into FOMC. If you do get this pullback and test the upper bound before FOMC, that would be a good chance to range trade it, short it, before FOMC and then be out by FOMC, because you're making the statement that you don't expect this to really find any direction to the upside or the downside before FOMC. So if we pop higher on Monday and we test the upper bound, you could short it, Monday, Tuesday, and then into Wednesday's FOMC. But assuming it does nothing, I'm going to be looking for the breakout on FOMC. Any pullback after that is the opportunity to get involved down to the 1.1960. And again, if we pull back, even on Monday or earlier, this would be the second place I'd be looking for a near-term short. And it may be the case again, we just consolidate and then we push higher on FOMC. I'd be looking for it to stall out, wait a few hours, and then I'd be looking for the short opportunity from this area in pound dollar. And last but not least, we have euro dollar. Again, I expect this to do pretty much nothing into Wednesday. I'm going to be looking for the breakout on FOMC. I'm going to be looking for the pullback and then the short-term intra-week follow-through into the prior low over here at the 1.0460. Or, just like the others, if we pull back once more and we test this high right in this upper bound over here, this is going to be a great place, especially if we get FOMC, we kind of stall out. This would be the second place I'd be looking for a near-term short in euro-dollar next week. Okay, so wrapping up the video with gold and silver, and I'm going to be trading these markets, given the opportunity, reactively next week. Why do I say that? Because we all know that we've seen, gold pushing higher. We've seen gold outperforming to the upside. What hasn't been mentioned so much is that this coincided with that near-term top in the dollar, where the dollar started to consolidate. And the problem is, we had the scorecards peaking for the US dollar. It was still bullish, but that is signifying that it's likely to go into a bigger consolidation. And now we've had the consolidation. As you've just seen, the scorecards are suggesting that we may be on the next leg up in the dollar. If that's the case, taking into account for FOMC as well, but if that's the case and we are about to start the next leg higher in the dollar, this is going to put downward pressure on gold and silver. That doesn't mean gold cannot continue to appreciate as a safe haven asset, but it's unlikely to appreciate as sharply as it has been with a weaker or consolidating dollar. So going into next week, what I'm going to do is, with gold and silver, I don't want to trade them kind of between the upper and lower bounds next week. The opportunities I'm going to be looking for are as follows. If we get gold pulling back, especially as it's acting as a safe haven asset, with what's going on in the Middle East, I am going to be looking for a potential long opportunity from the lower bound at the 1960 area. This is the opportunity I would look for to the upside in gold next week. Now, alternatively, when we move on to silver, if we instead just push higher in gold and silver and we test the upper bounds, if we're getting a strong dollar, that is going to be the opportunity to short silver from the upper bound. So to summarize this, I'm going to be looking at potentially buying gold from the lower bound. I don't want to short it because of its safe haven asset status and with what's going on in the Middle East. But I don't want to be long silver if we get a stronger dollar. In that case, I would be looking at shorting silver from the upper bound. So here's what I'm looking at in silver going into next week. If it pulls back and tests the lower bound, instead of being long silver with potentially a stronger dollar, I would rather buy gold from the lower bound and leave silver altogether, because gold has safe haven asset status, silver doesn't. Whereas if we get a stronger dollar and this acts as a headwind, in other words, it puts downward pressure on gold and silver, if we get both gold and silver testing their upper bounds, this would be the area, the 24 handle, where I would be looking for a near-term short in silver. So to summarize that, once again, I'm looking to be reactive with gold and silver next week. I don't want to buy silver and I don't want to short gold. So if we trade into the lower bound in gold and silver, I would be looking potentially at being long gold. And if we trade into the upper bounds in both gold and silver next week, I'd be looking reactively for a near-term short opportunity in silver. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.